Hi everyone, welcome back to the audit and attestation class. In this class, we'll be understanding in detail about the limitation of controls, including the risk of management overriding of control. So let's dive into for more detail. So now we will be doing limitation of controls and risk of management override. This is a very small topic, and after this we'll be jump into the fraud risk. So we'll try to cover this fraud risk area as well today. Maybe we can extend 5 minutes if needed, but hopefully we'll cover this in next 1 hour 10 minutes, right? So before we went on a lunch break, we covered two topics, right? One is for IT system, IT general control, and application control, right? Which is impact on like, so this one, like IT system, IT general control, and application control. So we understand what is IT system, type of IT control, benefit of IT control, risk relating to IT systems. Then we discuss on effect of IT on 5 component of COSO, right? And after that, we touch base on IT general controls and IT application control. And then we did certain practice question, right? After that, we studied on service organization and implication of service organization. So we understand what are the transactions or what are the accounts, balances, and disclosures comes under the service organization requirement. Then we understood like who is service auditor, who is engagement audit, who is user entity, which is like audit client, who is user auditor. Then we discuss on type 1 SOC 1 report, type 2 SOC 2 report. Then we did some questions on that also, right? So now we are jumping on third topic of the day, which is limitation of controls and risk of management override. So all the controls, whatever the management put in place, is always have some level of risk of management overriding. Why? Because management is always be in a position that they are over and above the controls, and they can manipulate within the controls, or they can override those controls and do based on like their rationales, opportunities, or other you can say pressure, right? So those are certain limitation of any controls, and those are the limitation actually for the controls, because management can override those controls because they are in a position to influence those controls, right? And they are in a position to override those controls, right? First point, if you see limitation of control. So limitation of controls is one point, and second thing is management overriding of control. So these two things will be break up separately so that we understand in a different concept or individual concept. So first is limitation of control. Limitation of control, like for example, involvement of human judgment in decision making. Like for example, how much is the percentage of debtors with your doubtful debts, right? How much of your credit sales may be doubtful, or maybe how much warranty claims can you expect, right? And how much percentage of your old inventory can be considered as obsolete inventory. So there's a lot of human judgment and estimates involved, and typo error is also being part of it. If you see like second point, human error or mistake, like typo error. So when you are posting, instead of $5,000, you have posted $50,000, right? Or instead of $50,000, you mentioned $5,000. That's also being like human error possible, right? Despite of having stringent control, which is all authorization, approval, and everything has been followed, but there might be a chances that there may be certain typo error. For example, an invoice is of $5,000, and instead of 5,000, you have approved for $15,000, right? That may be within your limit of payment. So that's the reason like control has not given you pop-up, that is it's out of your authorization limit. But it may, these kind of problems or these kind of risks are already exist, or these are the limitation despite of having all the controls in place. But there might be possibility within the control we can do certain mistakes. Right. Third is individual may not understand the purpose of automated control and use information produced by IT. So there might be like, if you see like old school, you can say managers, right, which do not embrace much on ITT, they still believe on like manually reviewing the things, right? So that's also a limitation, that you are not effectively using the IT control. I have seen in many of the company, the people have good IT infrastructure and IT controls, but they are still doing manual reconciliation of the same thing. For example, let's say let's say calculation of inventory balances, right? So the system is doing all the mathematical accuracy, like quantity multiplied by rate and coming up to the value. But at the same time, the individual who is the owner of the store or maybe inventory in charge, they're also doing like mathematical calculation to reach to the same number. So they will be ineffectively, or they are very highly inefficient, right? Because like system can do those mathematical calculation accurately and perfectly with so much less time. Why you need over and above like manual controls, right? And in your audit, when you start performing the audit, especially for mid-size and small-size company, you will see a lot of inefficiency. Even though they have good IT system, they might be using NetSuite, they might be using QuickBook, in which there are so many things is being already automated into the system, has been very well proven and solid control internally. Despite of that, they will be still doing certain manual calculation, like for example payroll calculation, right? Sorry. So I have seen in like many companies, like payroll calculation has been done by software, but that payroll in charge will also do the manual calculation, right? So those all things, and then like instead of relying on IT control, you are using IT dependent manual control or manual control. So that may be the limitation of control, despite of the good infrastructure you have, but you do not have capable people to do that control, right? For example, in audit profession, some of you might be knowing data analytics, some of you might not be, right? Imagine a company you are doing audit without data analytics and with data analytics, right? There might be a good CPA who can conduct the good audit without data analytics, but there might be a CPA who can conduct more efficient audit with the use of data analytics, right? So it's a skill set requirement. So people are not skilled, or they are not ready for a change, not ready to upgrade themselves based on the new technologies, right? That can be a limitation to the controls. Any control, whether manual or automated, can be failed by collusion. What is collusion? Any idea?
Like when two or more people get together and plot something or plan something.
Yeah.
That's collusion. Yes.
Yeah, absolutely true. So when two or more employees club together and commit a fraud, for example, cashier and like his manager, like cashier has made certain room entry and his manager has approved, and they have kept the cash in their pocket and they both are having party, right? That could be possible. As a company, you have put the control. There's a cashier who is maintaining the cash, and there's a supervisor who will be reviewing the cash balances. But if they both join the hands, they can override that control, right? Through the collusion.
So also like 5,000 transaction limit, but here is the 50,000. So the supervisor
Has approved.
and then he has approved.
Yes. Absolutely true. So same way is the management override of control, which we'll be discussing in second part in detail. The potential of override of control depend upon the control environment and control manager attitude. So here, the overall control environment, how stringent and how strong control environment you have, it depends on that, and the attitude of the individual. If, for example, like I do not want to quote specific to any category, but in a government job, like in a country like India, Africa, or maybe like which is developing nations, there you see like people join the government organization and they give bribe to join it, right? So intention behind that job is not to serve the public, is to recover the money they have paid for it. The attitude change, because you have not joined an organization to serve the nation or to serve the company. You join an organization by paying the bribe, and you have joined by paying the bribe. What's your first thing you will be doing? As much as steal possible, as much as embezzlement of cash possible, as much as misuse of your position. You can see in like our government machinery, right? I do not want to quote any particular department, but we all know it very well, right? So same thing is attitude is the most important thing, right? With what is the attitude of that individual? As a management, we need to take a severe or significant action where like the problem is with attitude. And in EY GDS, we have an example. Right now in our company also we have set certain example. We have asked to leave certain people. Same way in like EY, we have seen like certain people as well asked who are not working with integrity or ethics, right? So same way, like as an organization, we need to see whether like the team members are working with integrity or ethics or not. If the attitude is an issue, then it's a big problem, right? And there might be a more risk of fraud. So in next topic, which we have fraud risk, we'll be discussing more in detail on attitude, opportunity, rationalization, and all those stuff. But here, like it's also been part of the risk of management override. A note over here is internal control, no matter how well it is being designed and operated, can provide an entity with a reasonable but not absolute assurance. So no internal controls or no internal control testing will make you as a CPA comfortable to give absolute assurance, because your audit is subject to sample audit, right? You're not testing anything and everything which is conducted in a client, right? So you cannot give absolute assurance that everything is perfectly fine. So it's always be you're giving a reasonable assurance. Any you can say testing you have done for the design effectiveness or operating effectiveness will be in a position to conclude on the reasonable assurance, but you cannot give any absolute assurance.
So any questions? Let's practice a question. There was one question where there were two options. One, like what statement would the auditor give? Or will it be no material weakness exists, or was it no material weakness was identified by the So
Identified.
it was not identified by
Yet, yes, we cannot say exists. That's a absolute.
Absolutely, exactly.
Yes, absolutely. Very true. So here, like Kosh here an example based on like the practice he has done. In one question, he noticed like what exactly was the language?
No material weakness exists in the organization, or no material weakness was identified by the organization.
Yeah. So which statement is right? No material misstatement exists, or no material misstatement identified. So as an auditor, we can give no material misstatement identified based on the audit procedure performed by us, right? We cannot say no material misstatement exists. If we say no material misstatement exists, that means we are giving absolute assurance, right? Makes sense? Yeah,
Yes, yes,
Kashish,
yes.
Ayush, okay. So second part is management override of internal control. Like we discussed earlier also, management is in a position that they can override the control because they manage and maintain the control, and they have generally super admin access, right? If I say in terms of IT, they generally have super admin or admin access where they can manipulate within the controls, right? They are in a position to easily manipulate or easily override the controls. Right. So management is in a unique position to perpetrate fraud because of its ability to manipulate accounting record, prepare fraudulent financial statement by overriding established control that otherwise appear to be operating effectively. So they can, for the time being, increase the limit in the system and pass the entry, and then further they can decrease the limit, authorization limit. Right? They have that super admin control. Right? At that point of time, when they increase the limit, the system will not pop up if you are making an entry for additional amount, right? And then if they reduce it, then generally public will not make any entry like this, right? So they are in a position they can do a lot of things.
So, even until influence by management will fall part of the strategy. Let's say because this is where they are able to manipulate
Yes.
themselves.
Yes.
But let's say they are influencing a decision.
Yes, absolutely true. Absolutely true. So here, very good point like questions bring. If you are in a position to influence, like in a management position, you are in a position to influence. Let's say there's a maker and checker. For example, like provision for long-term liability, right? You have a payroll executive and you have a manager of payroll accounting. So you are at like controllership position. Let's say you are a finance controller and you finalize their pay scales and you finalize their promotion, increments and bonus. So they are reporting to you ultimately. So if you say like our provision should be $10 million instead of $15 million, then probably they under the influence pass those entries. Then also it is comes under the management overriding of controls. Right? Make sense, everyone?
So how will we capture
Yes, sir.
if there is any management override?
Through audit procedure. We are coming to that. We're coming to that. So there are a lot of additional audit procedure we need to perform. Right? To identify whether there is management overriding of control or not. Right? So next paragraph, if you see, management override of control can occur in unpredictable way. Due to this fact, the auditor should perform procedure that includes the following. So these are additional procedures as an auditor we need to perform, because like generally when management do overriding of control, they do not do in a simple way, or they do not do in a way that can be easily captured. Generally, they do all the audit trails update. They will fudge the document, they will fudge the supporting, they will fudge the invoice, they will fudge the POs and everything. Right? Because like in management, they're smart people. They're not like small employees or who are not knowing the things. They are in a position who knows each and everything. They also understand like what can be come under the audit radars. So they know, right? Being in a position, they know like what employees can do and what auditor can do, what regulatory can do. They can manipulate the stuff within the gamut, right? They are actually in a position. So to capture those misstatements, you cannot capture 100% for sure, and you are not giving like absolute assurance. You are giving a reasonable assurance. So you can select certain samples or identify certain sample or do certain additional procedure to identify whether in this particular financial statement line item management has done any override of control. Right? Management overriding of control is directly correlated with the fraud risk. So in next topic, when we are studying fraud risk, we'll see a lot of things very much common between management overriding of control and the fraud risk, which we'll be studying in next topic. Right? Here, for the fraud risk and for the management overriding of control, you'll be planning and performing certain additional audit procedures. What are those procedures should be? First is examining the journal entry. So if management is posting any entry, then it will be captured in the journal entry, right? So you have to test the journal entry and you need to give more emphasis to the manual journal entry or adjustment journal entry. So there are three types of journal entry. One is standard journal entry. For example, you are in SAP environment, right? SAP, in that SAP you have PPNE module that is automatically calculating depreciation and posting into the system. That's an automated journal entry. So that would be like a system driven calculation. If you have checked the basic inputs and you have already have a comfort on IT journal control and IT application control, then you are not worried about it, what is coming from there, because you have already tested the input and processing. Now, second thing is manual journal entry. So for example, at month end, there might be warranty provision, there might be prepaid entry, there might be accruals entry, there might be interest calculation entry, which is like routine manual journal entries that employees might be posting into the system based on their respective field in the financial statement line item, right? And then there might be some adjustment journal entry. What is adjustment journal entry? Any idea?
Yeah, adjustment journal entry would be an entry which is like a provision entry or special entry which is being posted after the closure of accounts to adjust a particular ledger which
Yeah.
is wrongly posted. That is an adjustment entry.
Yeah. Huh? No.
Or to correct some mistake as well,
Yes.
that's the main.
Yeah. Yeah. For example, like we were discussing earlier, the system do not allow any backdate entry, but there are some adjustment required, right? So for that adjustment, whatever the journal entry you are posting is an adjustment journal entry. So for example, like when you have conducted the audit, and in that you have identified certain journal entry which is coming above the threshold limit of SAT, and you are requesting management to post those journal entry. That is also an adjustment journal entry, right? And then for example, when they are doing a reconciliation after the closing of the financial statement, they are doing a bank reconciliation, let's say, and they found like certain checks has bounced, right? It's no more, like you can say you have been credited in your bank account, so you need to make an adjustment entry manually for those. So those,
Can you say that manual entries and automated entries are ID?
standard
For
entries,
the first transaction that's happening.
yeah, those are standard entries. Yeah, and adjustment are, yeah, non-standard entry, yes, otherwise, right? Makes sense. So when you are testing management overriding of control, you will be focusing on non-standard journal entry more. You're giving more emphasis because those are non-routine journal entry, right? Those are non-standard journal entry as per the business norms. For example, company has done any acquisition or merger. For that, they might be doing like journal entry, right? So those kind of significant journal entry you should be testing, whether the valuation has been considered appropriately, whether all as per the merger or acquisition deal has been accounted for appropriately, all the assets has been transferred or taken over, all the liabilities has been transferred or taken over or not, right? So those things you need to test more in detail. Management override of control can occur in unpredictable way, and due to the fact auditor should perform the following procedure. First one is examining journal entry and other adjustment entry or evidence of the possible material misstatement due to form. Second is reviewing accounting estimate. So accounting estimate is the area where management judgment matter the most. Because like management has judged something, and based on their judgment, they have estimated something, and based on that estimate, they are posting certain entry. Like we were discussing earlier, an example for warranty provision. So management estimate like 1% of their sales is a warranty claims year over year coming, and 1% should be the provision. But now as an auditor, if you have seen in current year, company has launched new product. And in this year, we have seen like more than 2% of the returns coming up, more than 2% claims coming up. Then you can challenge to the management, right? Same way like provision for doubtful debt. So they are creating like 1% of account receivable as a provision for doubtful debt. But you have seen in last 6 months or 12 months or 24 months, because of the COVID situation, let's say, the doubtful debt rate is high, increased. So you'll ask management, no, 1% nowadays for this account is not sufficient. If you have seen last 2 years of COVID impact, we have 5% actual bad debts. Why you are seeing 1%, right? So those kind of adjustment journal entries or manual journal entries or accounting estimate wherever it is, because those involve management judgment, and management can override the controls.
So in this case, management can accept the challenge, what we are challenging, they can.
No, yeah, 1 second, let me explain again. For example, provision for doubtful debt, right? Account receivable executive says like year over year, it was 1%, but because of COVID, since last 2 years, we are having 5% actual loss. And he has given a recommendation to make 5% provision. But controller says, no, it will impact my P&L. It will hit my bonus. It will hit my increment. And this year we are going for an IPO. We cannot say this much loss. And he override. He said, no, put 1%. Then that account executive or sales account receivable executive may not be in a position to counter that, right? Which, like Kush was saying, influence, undue influence, right? Because as a management, you can say so. But then you come as an auditor and you challenge that position. And management is saying it was like unusual. It was like one-time activity. But in future, what our customers are, you can take confirmation. Right? It's yeah, it's not easy, huh? It's not easy. They'll say these are the contact details, send them a confirmation. Then team member like us will go make the confirmation, send it to the client. Then we are doing follow up. Have you received the confirmation? So on and so forth. And most of the client.
Let me talk about accounting estimates. I'm just thinking, will it always be associated with, let's say, alignment or
Yeah, provisions.
Provisions, right? Like provisions, warranty provision, AR provision.
Leave engagement.
So the rest is always understatement of liability.
Yes, absolutely. Absolutely. Right, everyone? Make sense?
Yes, sir.
Yes, sir. Yes, sir. Clear.
So next point is C point, evaluating the business rationale for significant unusual transaction. So as an auditor, it's being our responsibility if there is any unusual significant transaction, we need to understand the business rationale for that transaction. Right? Ensure sufficient and appropriate documentation of procedure performed. Make sense? Okay, one small question, not much, just very small topic, limitation and management override. Which of the following financial statement line item has the possibility of management override of internal control that could lead to material misstatement in financial statement? Allowance for doubtful debt, accrued worker compensation expense, prepaid rent expense, or telephone expenses. Why option one?
The other three options are expenses. The first one is expense.
Yeah, makes sense.
Yes.
But in case of expenses as well, it can lead to material misstatement in financial statement, right?
Sorry, say that again.
The expenses, which is covered in second, third, and fourth option, if there is any override in those areas, that can also lead to material misstatement in financial.
Yeah, no, very good point, Ayush. Here, you need to wear the cap of professional skepticism, where you feel like management estimate is involved. Because like accrued compensation, it's straightforward. Like same way prepaid rent, you know, as per rent agreement, it's just a mathematical calculation.
Okay.
Telephone expenses, you know, like the bill will be.
I did this question and the rationale when I was reading through it, right? Another rationale was that for the other three options, you have a supporting document to, prove or validate
Yes.
that.
Yes.
The first one is where you are using the estimate.
Yes. Yeah.
So there is no document.
Yeah, very good. So here, like I think Kush has done with in the software also this question. So there it has given like in all the three, whether it's rent expense, telephone expense, or accrued compensation, you have a you can say supporting document as well to those expenses, right? Whereas provision for doubtful debts is pure estimate. There would not be any invoice. There would not be any you can say purchase order. There would not be any payment, right? There would not be any vendor. Make sense?
Okay. Yeah.
That's also
Yes, sir. Yes.
very good rationale.
Sir, one more thing. Like overriding of internal costs can be done intentionally, no?
Yes, always.